Yeah, hi traders, JW here. As you can see, our balance at the end of the week is 122.51, so that's not bad for $11. Focused on just a few trades. Remember the rules of engagement. We don't trade with money you can't afford to lose. You don't chase the market. We protect our capital. We find a strategy that works, and we trade support and resistance as a basis for that strategy. So with that having been said, you have to do the work. I've given you a couple of clues. I use a baseline. This happens to be for me a 20 moving average. You can use a 50 moving average. You can do whatever you like. Here's the crossover figure here, 10. So I use 10, 20. And of course, when a candle closes up in here and the yellow line is crossed, you come down and you enter here. And if you go for a 4-hour chart, you can see that you got a close here and you would have got some money out of that, and then it pulled back, so it made a higher low and then it went for a higher low. So again, you get in here. So basically I have a look at the daily charts, and then I mainly trade off the 4-hour because that's what gives me the entries. Now I can go down to a lower time frame for entries as well. Now with silver, I got stopped out here, and I have to wait now. These are key day support areas and resistance areas, support, resistance. I'm not interested in trying to get back into silver unless I get a break above 19. I was always going to get into silver with a break of 18, but I had to wait for this candle to close, and then all you do, or all I do, there's where your entry is, and then your stop loss is down in here, and that's the way I've been trading this account. So that's a quick rundown, but you have to find the indicators that work for you. That's all I use, but basically support and resistance of the bigger time frames is the critical factor. As you see, I've got an alarm set. I'm not sure that this can get up above 19 yet. They're still printing heaps and heaps of money, and I think that this will keep the metals down around about where it is at. So the other trade I wanted to take a look at and talk about, you've heard me say that I don't trade a lot of patterns. I look for support and resistance, but I notice patterns when they're here. So we had this little head and shoulders or crown, whichever you want to call it. I'm not going to argue about it, but there was a pattern there which is suggesting that this up move is going to reverse and keep tracking down. You look at it on a daily chart and you can see that we're in a downtrend and have been for some time. So with that being said, it's very simple. Looking for the break of this support level on a daily chart, coincides with roughly the neckline of this crown. This is where the entry was in here. So that's where you take the trade. I'll highlight that in green for you. That'll work, just so that you can see it a bit better. So that's where you take the trade. The target was always going to be the support area down in here, and what I usually do is take 2 or 3 positions. I'm looking for always a 1 to 2 if I can get it, which I got here. And once the first position is off, I then just manually pull down my stop losses. I don't run a trailing stop. I just pull them down. So we'll change this to red so you can see. Just by way of explanation, because there's no trades on the table at the moment, so I'll just use this as a short teaching video. So with the entry here, my stop loss started there. Once the first entry was taken profit, all you do is you pull down your stop loss as you come. You take your first profit. You can see that I got stopped out here, so that was the trade. And then you just wait for another opportunity. The opportunity came at the beginning of this week, and I was able to get in again. Because it broke support. And that was right in there. And if you go down to a smaller time frame, you can see where you got the entries. You can go down to an hourly or a 15-minute chart and get an entry as long as it's below here, as long as you got a close below here. Now this was not a huge trade. This was the target that I was watching take one position, and this was where I was targeting. It hit its target. Usually you just put your stop loss. I just put stop loss above a couple of pips. Get rid of this stuff. Don't need it. Just so you just put your target. It had to break below this attempt here. So you just lift up your stop loss, and that is the target. It's not a lot of pips, but it all helps. So we're up in here. Now that whole move, like I said, wasn't a lot of pips, but that's the way I trade it. It was 38 pips there. So once that was taken, that's all there is to it. And it's real simple. It's not hard. Once you get going, you want to get it into break even as soon as you can, and then what happens, happens. And if it breaks lower, that's fine. And here's a classic example of why I don't like trading patterns as a fundamental basis to my trading decisions at support and resistance. Because today, in the last 24 hours, and the market will be closing shortly in a couple of hours, this whole move has been up and it's retested this area here. So what I'm going to be looking for next week as a possibility is a bounce off this area to see if it'll have another crack and going down. So that's just by a quick explanation of one of the trades. That's all I've got time for, because I'm going to keep these videos short. I hope this is helpful. Do your work. Do your forward testing, back testing. I've given you a couple of indicators that you could experiment with. You change them and make them work for the way that you want them to work. Now, this other indicator here, I'll give it to you next week. So have a great weekend. Cheers.